High yields always come with a question. Where is the income actually coming from, and what are you giving up to get it? Today, we're breaking down one of the more misunderstood option income ETFs on the market, the YieldMax MRNA Option Income Strategy ETF, ticker MRNY. This is the ETF Investor, and this fund is not what it looks like at first glance. MRNY is designed to generate current monthly income while providing exposure to the price movement of Moderna stock, ticker MRNA. But here's the first thing investors need to understand clearly. MRNY does not own Moderna shares. There is no stock in the portfolio. Instead, the fund uses options to synthetically recreate exposure to mRNA and then sells call options to generate income. That structure changes how this ETF behaves in both up and down markets. MRNY uses what's known as a synthetic covered call strategy, collateralized by cash and U.S. Treasuries. The fund is actively managed and uses a mix of standardized exchange-traded options and flex options. The goal is to deliver regular income while accepting capped upside and full downside exposure to the underlying stock's price movements. The strategy has three core components working together. First is the synthetic long exposure. Instead of owning Moderna stock directly, the fund creates stock-like exposure by buying and selling at the money call and put options with maturities ranging from 1 to 6 months. When structured correctly, this combination can closely track the price movement of the stock, even though no shares are held. Second is covered call writing. To generate income, MRNY sells call options with expiration dates of 1 month or less. These calls are typically written at strike prices roughly 0 to 15% above Moderna's current share price. The option premiums collected from selling these calls are the primary source of the fund's monthly income. But this is where the trade-off comes in. If Moderna's stock rises sharply above the call strike price, MRNY's upside is capped. The ETF will not fully participate in strong rallies the way owning the stock outright would. In exchange, investors receive option premium income, which can be attractive during sideways or modestly bullish markets. The third component is collateral. The fund holds cash and U.S. Treasuries to collateralize the option positions. This helps manage margin requirements and adds a layer of stability to the structure, but it does not eliminate risk. Now, let's talk about downside exposure, because this is the part many investors underestimate. MRNY's synthetic long exposure includes short put positions. Those short puts fully expose investors to the downside of Moderna's stock. If mRNA declines significantly, MRNY can experience substantial losses. The option income does not protect against large drawdowns. This is not a downside-protected product. It's also important to understand that because MRNY does not hold Moderna shares, investors are not entitled to any dividends that mRNA may pay. All returns come from option premiums and changes in option values, not from owning the underlying equity. So how does MRNY behave in real market conditions? MRNY tends to perform best when Moderna trades sideways or rises modestly. In those environments, option premiums can be collected repeatedly while the stock remains below the call strike price. Income looks attractive, and volatility works in the fund's favor. In strong bull markets, MRNY will likely lag the stock because of its capped upside. In sharp sell-offs, MRNY can fall nearly as hard as the stock itself because the downside exposure is real and direct. That's why this ETF should not be viewed as a conservative income fund, even though the yield may look very high. The income is coming from selling volatility and giving up upside, not from stable cash flows. Another thing investors need to consider is complexity. MRNY is actively managed, uses options with different expirations, and relies on precise execution. Performance can vary based on volatility levels, option pricing, and timing. This is not a simple buy-it-and-forget-it ETF. So who is MRNY actually for? MRNY may make sense for experienced investors who understand options-based income strategies, can tolerate equity-like volatility, and want to tactically generate income from a specific stock theme. It works best as a small satellite position, not a core holding. Who is it not for? It's not for investors looking for principal protection, not for those who want full participation in stock rallies, and not for anyone assuming that high yield equals low risk. The bottom line is this. MRNY is an option income ETF that uses a synthetic covered call strategy on Moderna stock to generate monthly income. The yield can look attractive, but it comes with capped upside, full downside exposure, and structural complexity. If you're considering MRNY, you need to understand exactly where the income comes from and what you're giving up in return. If you want, comment MRNY versus owning MRNA or MRNY versus other YieldMax ETFs, and I'll break down the differences next. And if this helped, subscribe to the ETF Investor for more ETF reality checks and strategy-first investing.